have an embargo time for Reliance Nippon management, so I'm afraid I'm going to have to go there. Let's bring on board Sandeep Sikka, the ED and CEO, and chat about how their earnings were. Sandeep, your profit this quarter has been at about 25% and revenue growth at 25% as well. What's been the key drivers according to you?
Yes, it's been a great set of numbers, and I think for us, what we are very happy about is also the maiden dividend that has been declared post listing. I think coming to the numbers, I think what has clearly worked for us is we continue our focus on retail assets. I think if you were to see overall as an asset management company, our overall assets have crossed 3,80,000 crores, broken down into mutual funds, which is about 2,50,000, pension funds, offshore funds, and ETFs. And what we see is growth coming on all aspects. Coming back to mutual funds, we are very happy to share with you post demonetization. Reliance Mutual Fund has seen highest inflow coming into the industry. Out of 1,80,000 crores of money coming retail money coming post demonetization, Reliance Mutual Fund has got 27,000 crores, so which is about 15% of the flows. And for us, the focus has always been long-term sticky assets. During this quarter, we have also opened 69 new locations. With this, our presence goes to 260 locations, which is by far the largest presence in the mutual fund industry in India. And also, our equity as a percentage of our total assets has gone up from 27% to 34%. So I think all these parameters put together, have been clearly, showing results, and clearly the operating leverage is clearly showing results.
Okay. Sandeep, your AUM growth has been at about 1.8% on a sequential basis and about 17% on a year-on-year basis. Which regions and segments, according to you, are contributing to this high growth?
The way we see this is, for us, we continue focusing on basically the retail assets, So if you were to see the breakup of the industry, out of the 22 lakh crores of the industry, mutual fund industry, 11 lakh is institutional, 6 lakhs is HNI, and balance is retail. So for us, while we are present in all the big cities also, but we keep getting a lot of strong flows coming from small cities and towns. We have seen flows coming from even smaller locations. We have seen good flows coming from Northeast, where we have also increased our branch presence. We have opened about 21 new branches in UP. So the way we are seeing flows are, we are trying to seed the market. Clearly, the initiatives of the government, various initiatives, whether to do with Jan Dhan, demonetization, and a lot of things happening on digital are showing results. And our endeavor is, to keep increasing the financial inclusion and especially specifically focusing on small cities and towns. So which has been one of the key drivers for the increase in profitability and increase in sticky assets.
Now, share of equity AUM at 34% has risen to 27% earlier. Can we see a further improvement there in terms of your market share?
Yes, the way we see is, there are two aspects. Clearly, like I mentioned earlier, our focus remains on retail. We continue, the SIPs have also increased to 23 lakh SIPs, which are roughly contributing 7,800 crores per annum. The way we see going forward, we see ourselves as a balanced asset management company, where we want to be on all the verticals, whether it's to do with from asset class, whether it's to do with equity or debt, whether it's active or passive. But going forward, we clearly see a trend in small cities and towns. We have seen a lot of investors, who used to traditionally invest in gold and real estate, and with the interest rates coming down, and especially with the term deposits also coming down, there's a clear shift in the behavior of investment, and we are seeing this money moving towards equity mutual funds. Going forward, we clearly expect that equity assets will keep increasing, as a percentage will keep increasing. However, having said that, we are also cognizant of the fact that we as a company to have long-term and stable profitability, it's important we have balance of debt and equity. At this point of time, if you look at our overall revenues, our revenues coming from equity is about 58% and the balance is coming from debt. So that why I'm trying to highlight this is it's important. The cyclical nature of equity markets do not have an impact on the profitability going forward.
Right, Sandeep, good morning. 2017 has been good for business. Will 2018 also be strong in terms of flows? Can high AUM growth of greater than 20-25% be possible this calendar year as well?
While I will not be able to give futuristic, prediction, but at the same time, the fact that we are opening, in spite of having the largest branch network, the fact that we have now taken our network to 260 locations tells you how bullish we are. and clearly at this point of time, like I mentioned earlier, while a lot has been talked about the mutual fund industry, the growth of the mutual fund industry, if you see the retail AUM, even today is only 5 to 6 lakh crores. This is just a very small percentage of the money lying in the bank deposits and the money that used to be invested in gold or real estate. We clearly see this shift happening. I am convinced that I think the retail assets will keep growing, and I think the kind of growth that we have seen in the industry, irrespective of markets, which way the equity markets perform, I think we are going through a structural change both for the country and the mutual fund industry. I think I don't see any reason why this growth will slow down.
Right. For the benefit of our viewers, Sandeep, how are the margins in the equity and the debt side panning out on the assets under management, and what is the outlook thereof?
Yeah, the way we see it, I mean, at this point of time, a blended yield is 61 basis point net realization. Just to give an overall breakup, the way it works in equity, typically we are allowed to charge about 225 basis point. In debt, it's 150 basis point. Typically, the industry charges in equity, while the industry charges about 225 basis point. In debt, what is charged is much lower, but that gets compensated by higher volumes. And in money market, which is basically the institutional part of the business, I think the realization is negative to 5 to 10 basis point. For us, I think our focus remains on profitable growth. We are very clear that going forward, as in past, going forward also, we'll keep working on long-term equity, long-term assets, whether debt or equity, and our focus for us will be more on bottom line than the market share.
Right. What about your annualized SIP flows of 7,800 crore rupees? Do you think they're going to multiply more going forward?
If you were to look at the numbers when we started the year, 9 months back, I think this number was, I think we had 18 lakh SIPs. At that time, the 7,800, what is today, was less than 6,000 crores. And we are trying to, as we are going to small cities and towns, I think we are trying to encourage people. The first step into the mutual fund industry should be through systematic investment plans. While I will not be able to give a futuristic number, but clearly we see this number has the potential to multiply many times from here.
And do you see further operating leverage kicking in as flows improve?
No, so I mean, to give an example, we talked earlier about SIPs. I mean, if you were to look at the SIPs now, the 7,800 crores of SIPs that will come in now, the cost that has already been factored into. So going forward, we clearly see all this, will keep going to the bottom line. So whatever, I mean, the operating leverage comes to play there. Also, we have been seeing, along with the partner Nippon Life, we've been trying to get a higher share of funds coming into India from overseas market. We have 3 funds in Japan. We have a UCIT in Europe. We have recently launched a fund in Thailand, India fund in Thailand. We have a fund in Korea. All these things are, all these international funds are also mirror images of our existing funds. So we clearly see a lot of these, as these assets are growing, which is almost today $1.3 billion of assets. I mean, all this is also going to keep adding to the operating leverage.
All right, Sandeep, congratulations and good luck for the coming quarters.